Hi, welcome to Finance with Fur.
I always say tariffs is the most beautiful word to me in the dictionary.
Trump's new tariffs explained who wins, who loses, and how to profit. So Trump is back in the headlines, and once again, it's all about tariffs.
Tariffs.
This is a direct attack.
Donald Trump, who changes his mind between, breakfast 11's his lunch and supper time.
Whether you love the guy or can't stand him, one thing you can't deny, he knows how to stir things up. In 2025, Trump's latest round of proposed tariffs is already making waves across the economy. But let's be real, what do these tariffs actually mean for everyday people like you and me? Are they going to make prices go up again? Will this help American jobs or just make stuff more expensive? More importantly, can you actually profit from what's happening? That's right, we're not just breaking down who wins and who loses. We're also talking about how you can turn this situation into an opportunity. Let's break it all down in plain English. No confusing economic jargon. Just straight talk about what Trump's new tariffs mean for your wallet and how you can play it smart. 10. What even are tariffs and why is Trump pushing them again? Let's start with the basics. A tariff is a tax on imported goods. So if the US puts a 25% tariff on cars from Europe, that means every time a car comes into the country from overseas, it gets hit with a 25% extra charge. That cost usually gets passed down to you, the consumer. Now, Trump's whole idea with tariffs is to protect American industries. He wants to make foreign goods more expensive so people buy American-made products instead. In theory, that boosts local jobs and keeps manufacturing strong here at home. Trump first pushed major tariffs during his first term, targeting China, steel, aluminum, and more. Now in 2025, he's talking about even bigger tariffs, possibly across the board, especially if he wins re-election. He says it's about bringing jobs back and reducing reliance on foreign countries. But here's the thing, tariffs can also raise prices, strain global relationships, and mess with businesses that rely on imports. So the big question is, will these new tariffs help or hurt us in the long run? 9. Who's most likely to be hit hardest by these tariffs? The people who usually get hit first and hardest by tariffs are consumers, especially low and middle-income households. Why? Because when companies have to pay more to bring goods into the US, they pass that cost right onto the buyer. So the next time you go shopping for a new phone, fridge, or even clothes, don't be surprised if the price tag is a little higher. Then you've got small businesses. Imagine you run a small furniture shop and you import parts or materials from overseas. Suddenly, those materials are 20 to 30% more expensive. You either eat the cost or charge your customers more. Either way, it squeezes your bottom line. And finally, industries that rely heavily on imports, like electronics, auto parts, construction materials, they're going to feel the heat. Many companies might slow down hiring, delay projects, or raise prices. So while the idea behind tariffs is to protect US jobs, they can end up hurting people who can't afford higher prices or don't have alternatives. 8. Who stands to benefit from the new tariffs? Now let's talk about the potential winners. American manufacturers could come out ahead. If foreign products become more expensive, more people might turn to locally made goods. That could mean more demand for US-based production and possibly more jobs in factories and plants. Certain industries like steel, aluminum, textiles, and even farming, if retaliatory tariffs aren't too bad, might get a short-term boost. Also, companies that already make everything here in the US could suddenly become more competitive. Not because their product got better, but because the competition got more expensive. Another group that could benefit? Investors who know where to look. There are companies that thrive when domestic production ramps up. And there are investment strategies designed to profit during inflation and supply chain shifts. We'll get into that soon. 7. The global ripple effect. Trade wars round 2. Let's not forget what happened last time Trump introduced tariffs. Other countries didn't just sit back. They hit back with tariffs of their own. That kicked off a full-blown trade war between the US and countries like China, Canada, and the EU. In 2025, it's likely we'll see the same thing. Countries will retaliate, slapping tariffs on US goods. That means American exporters, like farmers, tech companies, and automakers, might find it harder to sell abroad. It also means tensions between the US and other economies could rise, which usually makes the stock market jittery. This kind of back and forth can lead to unpredictable outcomes. Prices go up, jobs get lost in some industries, and global supply chains, already shaken from years of disruptions, can get even more complicated. 6. Inflation warning. Will tariffs make prices go up again? One major concern with these new tariffs is inflation. We've already seen prices skyrocket in recent years due to supply chain problems and rising demand. Adding tariffs to the mix could make things worse. If everything from electronics to groceries costs more because of import taxes, your dollar won't stretch as far. And when inflation goes up, the Fed usually raises interest rates, which means higher credit card bills, higher mortgage rates, and slower economic growth. So while the idea is to boost American industry, it might also trigger another round of price hikes that hit everyone hard, especially people already living paycheck to paycheck. 5. How to protect yourself financially. All right, now let's talk strategy. If you're worried about prices going up, the best thing you can do is start thinking ahead. That means budgeting smarter, avoiding unnecessary debt, and locking in long-term prices where you can. If you're renting, maybe talk to your landlord about a longer lease before rents rise again. If you've been thinking about a big purchase, like appliances or electronics, buy them now before tariffs drive up prices, and pay attention to where your money goes. Start shopping locally when you can. If tariffs hit imports hard, American-made products might become the cheaper option. This is also a good time to build an emergency fund. Tariffs can cause job losses in certain industries. If you're in a field that relies on imports, it's smart to have savings in case things get bumpy. 4. How to profit from the tariff shakeup. Now let's flip it around. Is there a way to actually profit from all this? Yes. If you invest wisely, tariffs can create opportunities. For example, US-based companies that produce goods domestically could see more demand. Think of manufacturers, suppliers, or logistics companies that don't rely on foreign parts. There are also sectors that typically do well when the economy shifts toward nationalism and domestic production. Construction, defense, energy, agriculture. These could all benefit if the US focuses more on self-reliance. Then there are investments like commodities, steel, aluminum, oil, that can go up in price when tariffs disrupt supply chains. Certain ETFs, exchange-traded funds, are built around these industries and let you invest without picking individual stocks. And don't forget REITs, real estate investment trusts, in industrial or warehouse space. If more production moves back to the US, we'll need more facilities to support it. So yes, while some people will complain about higher prices, smart investors will be positioning themselves to win. 3. What history tells us about tariff impact. History gives us a few clues about how this might play out. When Trump introduced tariffs back in 2018 and 2019, we saw short-term disruptions. Some US factories reopened, some prices went up, some trade relationships got tense, but over time, many companies adjusted. The same thing could happen again. Some industries will struggle, others will adapt, and some will thrive because they're in the right place at the right time. But here's what's consistent. The people who pay attention, stay flexible, and make informed choices usually come out ahead. 2. What you should be watching right now. If you want to stay ahead of the curve, keep an eye on a few key things. First, watch the stock market reaction. Investors usually respond to tariff announcements quickly. Sectors like manufacturing, agriculture, and energy will be the ones to watch. Second, listen to how other countries respond. If China, Europe, or Mexico retaliate, that tells us where the pressure points will be. Third, pay attention to the Fed and inflation data. If tariffs push prices higher, the Fed might raise interest rates again, which affects borrowing, housing, and the overall economy. Finally, follow companies that are moving supply chains back to the US. These are the businesses that could grow fast if tariffs stick around. 1. The bottom line, tariffs are a tool. Use this moment wisely. Here's the big takeaway. Tariffs aren't automatically good or bad. they're a tool. How they affect you depends on your situation and how you react. If you just sit back and hope everything works out, you might get caught off guard. But if you understand what's happening, make smart financial moves, and explore ways to invest in the shifts happening around you, you can come out stronger. Whether Trump's tariff plans succeed or backfire, one thing is for sure: change is coming. The people who win will be the ones who stay informed, stay flexible, and look for opportunities in the chaos. So there you have it. Trump's new tariffs in plain English: who's winning, who's losing, and how you can stay one step ahead. If this helped you understand what's really going on, make sure to hit that like button. Share it with someone who's trying to figure out how to protect their money right now. And don't forget to subscribe for more no-nonsense breakdowns on money, politics, and the economy. Thanks for watching, and I'll catch you in the next one.